Stockwatch is brought to you by Merchant Waste. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant Waste. Finance, invest, insure.
You're watching Stockwatch. I'm Ntaoleng Lechela, and joining me to unpack your stock-related questions this evening are Mark Toit from Oyster Catcher Investments and David Shapiro from Sasfin Securities. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag Stockwatch. Gents, thanks so much for your time this evening. Let's start with markets action. A raft of US data coming through, not looking pretty, right? We're seeing a softening labor market, consumer confidence faltering, retail sales growth slowing as well. And initially when I started the show around 5:30, it seemed like, markets are in the red. Now it looks like they're shrugging things off. Are markets investors just betting on that Fed rate cut, looking at the data we got out today, David?
Look, markets are holding up incredibly well. I think if you go back to the beginning of the year and you saw where we were when Trump came in and we had Liberation Day, I think even the S&P, which is up 15%, I mean, that's an incredibly good showing, and you're still getting a lot of positive reaction in the tech company. Everyone's trying to call a bubble, but they're holding up remarkably well, and results are good. I think we tend to brush that aside. If you look at the third quarter numbers, they were very positive. So, we can't really complain. I think we like to look for stories which are not really there. So I'm happy with where we are.
Are you happy with where markets are at, Mark? David talks about when you look over a long-term period, not even a long-term period, a long period, year to date, markets are good, markets are strong.
Yeah, I mean, we've had fantastic equity returns this year, particularly in South Africa, even with the rand strengthening. So in dollar terms, we've done even better. And I think that there's a bit of nervousness now around the Fed in December, whether they're going to cut rates or not. As the probability of the Fed cut goes up and down, markets go with it. But largely, I think that longer term, with Trump being there and he's determined to lower interest rates, and we'll see who the next chairman of the Fed is. I think that it's a good setup for equity markets, and like David said, the US economy still looks pretty strong, actually.
All right, let's get into some questions. You mentioned SA markets holding up well as well, and let's look at some SA Inc. stocks that haven't been faring well, when compared to the miners and the likes of Naspers and Prosus. Pepkor up for analysis. Is it a buy at these levels? The company also out with results today, earnings coming in strong, and also announcing plans to offer banking services. That financial services unit has also really been strong. Your assessment of that, Mark?
Yes, so Pep, we've liked it for a while. Results were good, pretty much in line with what was expected, but very good results. Earnings growing 15%. Earning 161 a share, more or less. What they call their fintech business doing extremely well. They sell 8 out of 10 handsets in South Africa. They've got 6,000 stores, looking to roll out another 300 in the coming year. Interesting that they've applied for a banking license. So, it is early days, and I think it will take a while to get going there, but obviously see an opportunity, and they have a fantastic footprint. So I think that they will continue to grow. They also have their optionality in Brazil, starting out slowly in Brazil, and that's also a difficult market, but opportunity for growth as well. So we like Pep, and we're happy with our holding and with the performance today.
And what about you, David? It's been so interesting to see some of these retailers diversify their revenue stream. Mark talked about that cellular unit, and I was just thinking about Mr. Price's results last week. Yes, that were quite well. Yeah.
I think it's brilliant. I think, it's now what, 17 odd % of turnover, 20% of their operating profit. So, and it's growing, and it's growing. So it's going to become much more relevant. I've always liked Pep from the very early days of Rainer van Rooyen. So that goes back many, many years. They're all around the country. They're opening 300 stores. Where? I didn't know there were 300 towns in South Africa. So, but it's, and until everybody's coming down now. Everybody's lowering their, even Investec now is starting to look at the middle market, having been always focused at the top. So that's where the spending is. That's where the informal economy are. So it's together with Boxer and other companies like this is an area that we should be in. Yeah.
Now, a company that hasn't been faring very well is TFG, and a question here on whether it is a buy at these levels, considering the shifting sentiment on SA fundamentals, David.
Funny enough, I chose it about 2 weeks ago with the health warning, simply because it had fallen so low.
Yeah.
Good management, and it's down quite dramatically this year. Look, the clothing retailers are battling, as we've seen with Truworths, we've seen it with Fashini, even Mr. Price to an extent. So I think at these levels, I'll put it in a nice way, the downside looks less than the upside. In other words, I think there's more upside from these levels than there is downside, particularly against an economy that's finding its feet or certainly leveling out. So I've always liked management. I like their stores. I like the way that they attend to their stores. So it's probably, I'll say it again with a health warning, it's not too bad at these levels.
Do you share the same sentiments, Mark, or would you rather go with, something that's doing a bit better than a TFG like a Mr. Price?
We do like TFG. We prefer it over Mr. Price at this point because the share price has pulled back so much. They didn't have a good set of numbers. I think that management oversold their prospects a bit. Current earnings print was disappointing. We do expect the South African economy to pick up still. And I think that they made a few fashion missteps, which hopefully won't repeat. And they don't have a debt issue. So we do think that it'll be better from here going forward.
Another one here on improved economic sentiment, right? It seems like that budget, the getting off the grey list, as well as that S&P credit upgrade, is giving many people some interest when it comes to those SA Inc. stock. A question here on PPC on the back of hopes of an improved economic environment. And I spoke to the CEO yesterday. He did say that they are starting to slowly see a pickup in infrastructure projects, which they expect to fuel demand for cement. Is this one you're looking at, David?
I looked at the numbers. I've watched it for a long time. It's creeping up. In fact, if you look at its chart, it's picked up from the very low levels of 2022 and is kind of edging toward, I don't want to say all-time highs because it's far away from that. But what does worry me, what concerns me, is that when you look at the revenue line, it's still very low. They did far better in Zim than they did here in terms of increase in turnover. And that's a worry for me. And you're not going to see this turnaround until we get huge increases in infrastructural spending, roads, bridges, schools, and so on. Even the bakkie builders, because when government wasn't spending, the bakkie builders would come in with their trucks and fill up with bags. We're not seeing that. So I know they call it awaken the giant. They're doing a lot below the line. A lot's happening there, but I still think there's time to go. I'm not going to call them down at all. I still think the trend that we're seeing is good, but let's hope that we start to see a lot more spending. Infrastructure spending. We're talking a lot, but
are we doing it?
Show us the money. Show us the money.
It's also a very competitive space. They talk of the cheap imports as well. We're also seeing Afrimets Lafarge also, coming through as well. What are your thoughts around the cement business and I guess PPC's prospects against the current economic environment?
Yeah, so I mean, it is a difficult and competitive space that they operate in. Every now and again we see a lot of cement getting imported into South Africa and at lower rates. There's issues with blending because you can actually blend cement, and if you build your house with subgrade cement, then there's a risk that it falls down, and we have seen that happen from time to time. And there's not a lot of checking or regulation of that at this moment. So it is difficult. I think that PPC is enjoying a better prospects in Zimbabwe actually at this time, because the Zimbabwean government increased tariffs on cement imports, and so the pricing environment has improved there. So they're actually making some good money in Zimbabwe, and they're busy with the big plant expansion in the Western Cape. So yeah, I think going forward, I think their prospects are fair. I guess that we prefer to kind of play the better South African macro prospects through the South African banking stocks. I mean, we think that they just are cheaper relative to the likes of PPC.
All right. A question on some international stocks. You've picked Ferrari before as a stock pick. So if you are asking if Ferrari, Starbucks, and Bookings Holdings are buys at this point.
I still like Ferrari. I mean, it's an exceptional luxury company. And I don't think you can classify it as a motor manufacturer, not at all. And I think it's just the kind of business where they can sell whatever they want to. They do modify or do control their supply. I think they came under a little bit of pressure by underplaying their outlook, but I think they overcame that when they produced results that were better than expected. Margins are good. And they produce nowhere near the number of cars that something like Porsche does, and generally their quality high. So for me, it's a luxury play. And the people who buy it don't buy one; they buy 2, 3, 4 cars. Crazy. As I say, buy the shares, not the product.
I was about to mention that. I think I can afford a Ferrari share, but not a Ferrari.
I've never been in a Ferrari, so.
Mark, have you been in a Ferrari?
Yes, I have.
Oh, okay, Mark. Let's get your thoughts around those stocks, Ferrari, Bookings Holding, and Bookings.com Holding, as well as Starbucks.
Yeah, I mean, I guess of the three, I would probably go for Ferrari. I mean, we have, look, with good equity returns, people who have assets are feeling like they've done well. Typically does lead to a bit more luxury spending. We saw good numbers out of Richmond.
Yeah.
So yeah, I think the luxury market is in a good place.
And do you think we're seeing a bounce back in the luxury market, David? Mark there mentioning what we've seen with Richmond, but Richmond has been powering throughout the slump. But we did see better than expected numbers from LVMH. Yeah,
I think we are, and I think there's a big push in China to increase consumer spending. Whether they're going to buy our luxury goods or not, I don't know. LVMH have done very well in Shanghai, opening up luxury stores there. So they are making a play again. A lot will, I don't want to say a lot depends on China, because I think as long as China remains where they are, you're going to see a pickup in the US and certainly in Europe and other parts of Asia. So I don't think it's going to be a runaway area, but it's certainly going to be a lot better than we have seen. So it's starting to show, it's creeping up, and Hermes, my favorite are Hermes, LVMH, and Ferrari.
So some green shoots.
So yeah, I would still put them in portfolios.
Okay.
My expectations are not great, are not very high, but I think over time you will be rewarded.
Yeah. And talking about the Chinese consumer, maybe let's take a look at Alibaba's results, right? Investors were really watching that cloud computing unit closely. Sales there up 34%. Your thoughts around that performance, Mark?
Yeah, so I actually don't look at Alibaba that closely, so I don't know if I can add too much. But Yeah, I mean, we do actually think that Chinese tech stocks, if you're given the relative valuation versus US tech play, I think that the Chinese stocks are looking better value. I think that you would always pay more for a US stock than a Chinese incorporated company, but the valuation gap is just too big, and it has been for a while. So yeah, I mean, I guess we would, on a valuation basis, prefer China tech over US tech.
What about you, David? Maybe you can give us further insight on those numbers.
Look, I buy Prosus or Naspers only for Tencent. I don't buy it for all the other stuff, So I still think that if you want exposure, Tencent looks very, very attractive for the reasons that Mark has pointed out now. And for choice, it's the one area that I, might look at in China. I think Baidu, Tencent, Alibaba look very, very attractive. I don't know the others, so that's why I'm mentioning those three.
And just on Naspers and Prosus exposure, a question here on the panel's view on the results. Mark, seemed good, but we did see some share price pressure overnight.
Yeah, I think that, I mean, the results were good. I think that there's a little bit of worry about a reduced buyback going forward. And, they've been selling a bit of the Tencent holding and doing share buybacks, which I think is the right move given the big discount that they trade at. But at some point, you're going to want to stop selling your Tencent shares down. So you could probably only sell another 2% of your holding, and then you wouldn't want to go below 20% of Tencent. So I think that there's a little bit of a market worry about that. Maybe the discount could widen a little bit. But longer term, I mean, like David said, we do also like Naspers and Prosus for the Tencent exposure.
Yeah.
And we continue to hold them as a weight position.
All right, let's move over to the telcos sector. Lots of questions coming through around Salce, of course, as it prepares to list on the JSE. I think it's on Thursday. David, I'm going to start with you. Are you seeing value there? Operationally different from the likes of an MTN and a Vodacom, benefiting from, those partnerships with the banks. But many have raised concern that it doesn't have a geographic diversification.
It's so competitive, I'm telling you. It's so, if you go through the numbers, even if you went through MTN's last numbers, once you go down to South Africa, it's a stretch. Vodacom, it's a stretch here. So there's huge competition. Telcom seems to be doing okay, but all of them are competing for the same pie. And in order to do that, somewhere along the line, you've got to give up margin, you've got to give up pricing. So Salce comes into it as, that's what concerns me, is that it's not an area that I want to go into or would go into. And I'm talking from a global perspective as well, anywhere in the world. So I hope it's success. I don't like to see failure, but I think this is a very, very competitive area around it. And, if you look at Pepkor's numbers, it tells you how competitive it is, and where the market is. But, good luck to them. But it's from my point of view, and I'm talking broadly.
Yeah.
I'm not a Vodacom, MTN, Telcom, or Salce holder.
Oh, okay. Your thoughts around the telcos sector, Mark? Are you seeing value there? David highlighting how competitive that scene is. I mean, you look at the likes of an MTN, Vodacom really struggling to grab market share in that prepaid space here at home.
Yeah, I mean, it is competitive. I think the other thing that we also are lukewarm on the telco space is the amount of capex that they have to spend to maintain their networks. So it is very capital intensive. I mean, I think we would prefer MTN just because of its greater exposure into Africa. So I think its growth prospects are better. South African market is very saturated. We spoke about Salce earlier. So, I mean, Salce doesn't own its own infrastructure. It basically owns the spectrum and the licenses. And so they don't own the distribution. So I think that those things also add up to more pressure on margins. So, I mean, we haven't applied for Salce shares in the IPO. I guess that tells you,
Yeah.
what we think of the price. But everything has its price, so let's see how it trades.
All right, let's get into stock picks. David, where are you seeing value this evening?
I'm still a big tech person, and I've been looking at, as it recovers, we're out of the bubble territory. I think that story's starting to fade. And I'm looking at Alphabet. I think, at its multiples now, it's still very, very attractive. I think it's in the low 20s. I love YouTube. I think it's bigger than any of the other streamers. They've just released Gemini 3, which is their AI play. We've seen the headlines today. They're selling their chips to Meta, or will sell their chips. I think that's the way they're going to go, where they will be responsible for their own Gemini or large language model. They'll be manufacturing their own chips and handling, all three. They'll be handling advertising themselves and so on. So I think it's a good play for the future. It's probably, the one that I'm most comfortable about buying at these levels, as I am with Microsoft. And Meta, and which one have I forgotten? Amazon.
So a play on the tech sector there. What about you, Mark? What are you hanging your hat on today?
So I'm buying We Buy Cars tonight. We saw it come out with results recently. The stock sold off about 15% in the last month. Principally, they felt a bit of pricing pressure with the entrance of Chinese vehicles into South Africa coming in at a very good price point. So that meant that they had to sell some of their second-hand stock at slightly lower margins. I think that they are largely through that period now. Management have said that they are largely through that period, and the growth in earnings will now start to come through again. They've grown from a 5% market share in 2021 to 10% market share, and I think that they will continue to grow. They're rolling out more representation in the Western Cape and Pretoria. And I think that on our numbers, earnings can grow 18% a year. You'll get a forward dividend yield of 2 to 2.5. And if you think of a 20% a year return versus SA government bond at 8.6, I think it's a very attractive return.
Gents, let's leave
Helen, you can't get Ferraris there though.
Unfortunately. Gents, let's leave it there. Thanks so much for your time this evening. Now that's all for Stockwatch today. Thanks to my guests, Mark Toit from Oyster Catcher Investments and David Shapiro from Sasfin Securities. Up next, The Close. Stay watching.
Thank you.